welcome back. Less than a week and counting for the union budget to be presented in Parliament, and the past week has been a bad one for markets. The Sensex losing about 4,000 points in just 6 days. We catch up with market veterans to understand what the budget holds for markets this time around. Listen in as BTTV's global business editor Udayan Mukherjee discusses some of these talking points with Rashesh Shah, Devashish Basu and Nilesh Shah.
Should the market have any expectations this time around? Because the budget is a big media event. I mean, people like us make a big song and dance about it. But is it likely to be a stock market event this time around?
I think, like every year, I think what the finance minister says in the budget affects the mood and the sentiment and the expectations. I think fortunately currently investors are in a good mood. I think everybody is very upbeat. In spite of the new variant and the fact that COVID is not over, I think people are looking beyond it. Investors are looking beyond this. So I think the mood is upbeat. The only thing that would be there is no upsetting of the apple cart. So I think as long as there is no real downside, and I think people are looking at action from the government and the pronouncement from the government to get the investment cycle kick-started. So if you ask me, as an economic watcher, I would like to see government step up on spending. I think fortunately the Indian government has got room to spend. They have not used up the stimulus in the last 2 years of COVID in a big way. So I think if the government indicates that they want to spend, it will increase the optimism that is already there.
What do you think, Devashish? Because I mean, it is now quite established that this is, as everybody calls it, a K-shaped recovery. At the bottom of the pyramid is hurting. The top seems to be doing quite well by all measures. Is it fair to expect a lot from a corporate or from a stock market perspective this time around then?
Well, the single biggest event, according to me, of the last 2 years happened somewhere in the middle of the year. Middle of the financial year, which is when we got a huge tax cut. So budget really had nothing to do. If you really take last 5, 7, 8 years of a series of events that have happened, that is the number one thing that completely changed the character of the profit and loss on the balance sheet of first the profit and loss and eventually the balance sheet of Indian companies. And it came at the worst possible time when the GDP growth rate for that quarter was just 4.2%, and that is the inflated figure, that is the recomputed GDP. In terms of the old GDP, it is still 2% lower, so it's the worst kind of a situation when you got that tax cut. So first of all, I don't think there is any correlation between what the corporate sector wants to see, likes to see, gets to see, really, and what the budget measures are. Year after year, there is this huge interest, there are tons of memorandum which goes to the government, lots of demands, all industry associations have their own list, market has its own very, very narrowly focused thing, which is tax cut and capital gains and dividend tax and STT, and that's about it. They can't see beyond that, essentially. And then very wider perspective, which is what the corporate should be getting. But the government does what it wants to do. There are different themes in each year, but then the internal measures of many of these don't match up with the themes or what the government subsequently does through the course of the financial year. And finally, what actually events transpire, how corporates react, the external events, the international events, all that really are far, far removed from not only what the budget expectations are, but what the actual budget measures are. So I would really not put too much of weight in it.
Sure. Nilesh, there's a lot of people who say that, this time if the finance minister needs to do something, it is actually at the bottom of the end of the pyramid. I mean, towards rural India, towards India's health infrastructure, towards MSMEs, because that's the part which has been hurting. And while there is some tenuous link to demand from corporate demand from that aspect. Generally, this is not the area which the corporate sector or the stock market is very focused on. Would you agree with that? That this time's budget is probably more about not the top end of India's economy, but the bottom end?
Undoubtedly, Uttayan. Today, trade, agriculture, private sector investment and government spending is above pre-pandemic. But unfortunately and sadly, consumption is below pre-pandemic. And as you correctly mentioned, it is the bottom end of the pyramid which is being hurt maximum. We are selling more SUVs than pre-pandemic, but we are selling less entry-level bikes. Clearly, government needs to step up to support consumption at the bottom of the pyramid. They did excellent job with a credit guarantee scheme of 3 lakh crore for MSMEs. But MSME cannot survive only on fixed income or debt. They need equity. How do we mobilize equity for them? How do we create reskilling of MSME entrepreneurs so that they can move from unproductive or uncompetitive, whether it's old economy or new economy, into more competitive scenario? And most importantly, can we even think of urban Manrega? In urban India also there is a higher level of unemployment at the bottom end of the pyramid. We have seen rural Manrega or Manrega giving rural employment. Probably there is a need for that in urban India also. So this time budget has to not only support growth but also equitable distribution.
Rashesh, how important is all this for the purposes of the stock market or even corporate India? Because, we've seen the corporate numbers over the last 4 quarters. They seem to be on a tear. And while we are talking about these misfortunes of the MSME segment or rural India, the corporate India, the big companies seem to be actually reveling in it. They are grabbing more market share from these unorganized players, and their profit pool and their revenue pool is only growing. But is there a point where the bottom end of the pyramid actually begins to bite this kind of demand growth that we are seeing? That's the key point at which the corporate sector will notice that no, we cannot continue to grow with 50% or 60% of India hurting so much.
Absolutely. I think as you very correctly said, I think the stock market is a very small part and a small barometer of the overall Indian economy as a whole. And though I think what has happened last 2 years, the RBI policies on liquidity as all over the world, all the central banks, I've always seen that any intervention by a central bank, any intervention through the monetary policy helps the formal sector and the larger corporates immediately, because that's immediate, and that is why I always say we need to balance the monetary policy with the fiscal policy. The fiscal policy, what the government does actually addresses the lower half of the economy, right? What RBI does addresses the upper half of the economy. So I think the last 2 years, as all these central banks have loosened the purse strings, brought down interest rate, infused liquidity, the formal sector, the larger corporates, the larger companies have done well. And that was a good thing because it kept at least the economic wheels going. But we clearly see that consumption is slowing down in India, and as you know, consumption has been the key driver of India. So unless we revive consumption, and for that, the fiscal policies matter a lot more than monetary policy. Monetary policy works when there is a crisis like what we had in the last couple of years. But I think to revive growth and demand and eventually the capex cycle, because ultimately the corporates also will follow the consumption cycle. So we do think that the fiscal policy intervention is going to be the most important indication government can give. And it is time that government starts spending. If you look at the fiscal stimulus or so-called stimulus we have had in the last couple of years, they were also indirectly through credit guarantees and stuff like that, which all affects the formal sector. I think the direct spending by the government, there have been a few programs, but I think government needs to spend at least about 3 to 4 lakh crore putting money directly in the hands of people, which will start the consumption and the demand cycle, and that will fuel this current optimism, because this current optimism is partly based on liquidity and the monetary policy, but also partly based on expectations of growth. So if there is no consumption growth, then growth will start petering out, and that will affect all investors across.
Rashesh alluded to the fiscal space for the government. I want to bring you in on this because There are only two ways the finance minister can move this time around. She can either say that tax collections have been good, buoyant, and therefore I want to get back to the path of fiscal consolidation once again. Or she could say that because there is money to be spent towards the lower end of the pyramid, she would need some more grace period, maybe another year, and she would keep the fiscal deficit relatively high. Which one would the stock market appreciate more? More fiscal elbow room or getting back to fiscal rectitude?
So the best thing that stock market will expect is that government becomes innovative. It is possible to spend money and yet not leave the path of fiscal prudence. The two options for government are to raise non-tax revenue. In divestment, we have failed every year in achieving the target no matter what kind of market it is. I think it is time to think about divestment separately. Maybe a holding company which appoints professional managers to monetize government's holding could be a better way to do divestment. The second thing is asset monetization. The last year announced National Asset Monetization Program. Banking system is flush with liquidity. Global investors are hungry for yield. Rupee is remarkably stable. And there is appetite for domestic investors also towards higher yielding securities. So using a better innovative approach to divestment and asset monetization program, finance minister will have revenue and also ability to spend money and yet walk on the path of fiscal prudence. Undoubtedly, investors today will take a fiscal roadmap towards fiscal prudence far more enthusiastically.
Watch the full interaction on businesstoday.in and Business Today YouTube. That's why we leave it on the show today. Thanks so much for watching.